All right, hey, this is Khalid Nathan Aleem, the real estate boy, and this morning, welcome to Philadelphia Fridays, where we talking about news or real estate news that got to do with the Philadelphia market and the surrounding area. Today, we're going to be talking about inside Philadelphia's multifamily market. For those of you who don't know, multifamily means 2 units, 3 units, or 4 units. Okay, so that's one building and they're commonly called duplexes or triplexes or quadplexes, okay, or a fourplex. So a duplex is when you have one building, 2 units. Triplex is when you have three buildings or 3 units, one building, 3 units. Excuse me, getting mixed up. And of course, a fourplex is 1 unit and you have one building and you have 4 units. All right. I don't know why I'm getting tongue tied this morning, but that's the article that we're going to be going over this morning. It's called Inside Philadelphia's Multifamily Market. All right. And this person, they're interviewing Equus Markets Joseph Mullen. Okay, so he's going to discuss what the driving growth in the metro is. So they're going to ask him questions, and then he's going to reply. Then I'm going to tell you what I think also. Okay, so the article says that Philadelphia's multifamily sector showed a great deal of resilience in the face of the health crisis and continued to recover during 2021. Now, thanks to strengthening economic fundamentals driven largely by the Metro's expanding life sciences center, both developers and investors are taking note of the opportunities the market can offer. So in Philadelphia, we have a growing life science sector. It's booming. It's booming. So you have a lot of scientists, a lot of people that support that industry moving to Philadelphia. Okay. The article continues to say, to find out more about Philadelphia's multifamily landscape, Multi Housing News reached out to Joseph Mulligan. So that's who they're talking to, this guy named Joseph Mullen, not Mulligan, Mullen. He's actually the president of Madison Apartment Group, okay, the multifamily management affiliate of Equus Capital Partners. Equus Capital's Philadelphia's portfolio currently encompasses 1,700 rental units, including projects under construction and in planning stages, according to the Yardi Matrix data. Below, Mullen highlights some of the factors that make Philadelphia an attractive multifamily market. So this guy is the president of Madison Apartment Group, and this Madison Apartment Group, they have 17 or over 1,700 they have over 1,700 rental units in the Philadelphia area. And when we say Philadelphia, we're talking about Philadelphia and the greater Philadelphia. So the suburbs on the west, you have Upper Darby, not Upper Darby, the Delco, Delaware County. All right. Then to the north, you have Montgomery County or Bucks County. To the north, to the straight north of Philadelphia, you have Bucks County. And to the northwest, the northwest, you go up, then that's Montgomery County. All right, so let's talk about it. Let's get into it. Let me just make sure y'all ain't got no questions over here. All right, it don't look like it. Okay, y'all. So let's get into this. All right. So it says that multifamily fundamentals have significantly improved over the last year in the metro, talking about Philadelphia. Do you expect this upward trajectory to continue this coming year? So I'm going to answer first. All right. If you guys don't know me, it's Khalid Nathan Aleem, the real estate boy, and I am a licensed real estate agent in Philadelphia, Delaware, and New Jersey. All right. So I'm boots on the ground here as far as Philadelphia in the housing market. So I'm gonna give you my opinion first. I do expect the upward trajectory to continue, especially in multifamily houses. In Philadelphia, there's just not enough homes. There's just not enough homes. So when that happens, you have the old supply and demand. So there's not enough supply, so the demand is going up. And we have a growing in Philadelphia, we have a growing medical sector, got a bunch of hospitals in Philadelphia, and we also have a growing life science area. Also, actually, a life science of Philadelphia just partnered with St. Joe's, so they're actually going to merge into one university. That's going to be happening. I don't know when it's going to be happening, but it just went through. I guess they just made the agreement to do that. So they're going to merge now. A lot of people are coming to Philadelphia for the life science of Philadelphia, that college. But now with St. Joe's merging, I wonder what the name is going to be, but the name is probably going to have something with life sciences in there. All right. So St. Joe's has a beautiful campus on City Line Avenue. So I think that's going to pop them off major, making Philadelphia, it's already as if Philadelphia is kind of the hub as far as life sciences in America, but that's just going to strengthen their grip on there. So there's going to be a lot more people that come to Philadelphia for life sciences. Anyway, I'm saying all this to say that I feel like as far as multifamily goes. Now, when we're talking about multifamily, what are we talking about? We're talking about rental units. We're talking about rental units. But multifamily is different because people will tend to stay more when they rent out homes. When a person rents out a home, they're going to tend to stay more versus a multifamily property. A multifamily property is really for a temporary tenant. It's really for a temporary tenant, which can be good and bad. It can be good because if you have a bad tenant, you can get them out. Get them out, meaning that they probably won't be staying there for long. Also, multifamily units tend to be smaller. So when they tend to be smaller, I'm going to say it like this. They're less conducive for children. Why is that important? Because almost nothing beats a property up like kids. Kids destroy a property, okay? Straight destroy. They say that kids destroy properties more than animals. And I got kids, and my kids, man, they will tear some walls up. So I'm saying that to actually say that the type of tenant that's going to move into a multifamily is going to be a little bit different than that type of tenant that moves into a single family home. Okay, that's the point that I wanted to make. So what did Mellon say about this? Okay, so when this guy John Mellon, when he was posed with this question that do you expect an upward trajectory to continue this year in talking about multifamily, this is what he said. He said the majority of our portfolio is in the suburban Philadelphia market, which did not experience the kind of downturn seen in the urban Philadelphia markets. Occupancy and collections remain relatively strong since the onset of the pandemic, and rent growth has been significant since early 2021. We expect strong fundamentals to continue. Rent growth may slow down, but will remain strong relative to historical levels. So what John said is their market is in the suburban Philadelphia. So what happens, I'm going to give you the dynamic. Philadelphia is the poorest of the big cities. So most of the poor live in the city. So what he's saying is that the suburban areas, most of their portfolio is in the suburban area, probably Montgomery County and Bucks County. So they didn't experience the downturn seen in the urban Philadelphia markets. Was there a downturn in the urban Philly markets? I wouldn't say a downturn, okay? Just like all of the other markets out there in America during the pandemic, you had a lot of people, whether warranted or unwarranted, taking advantage of the payment moratorium or the eviction moratorium. They were taking advantage of it. A lot of people in the city were taking advantage of it, but not so much in the suburbs. So what he's saying there is that the suburban Philly market is on and popping, it's been on and popping, and it's going to continue to be on and popping. They have strong fundamentals out there. Like he was saying, rent growth might slow down, but historically, it's going to be strong. And I totally agree. I totally agree. But I agree in the suburban market, but I also agree in the Philadelphia market also, is that what we're going to see is we're going to continue to see an uptick. We're going to continue to see rent growth. Why? Because there's just not a lot of affordable houses in Philadelphia. And what we're going to see here also soon, maybe not this year, but we're going to see a lot of Section 8 folks out there looking to get into homes. Why? Because Philadelphia has a lot of Section 8 contracts that are going to be running out soon in the next 5 years. So what does that mean? I'm going to unpack that for a second. So you have Section 8 and you have Section 8 vouchers. So you have Section 8 vouchers, and in real estate, we should all know what this is. So I won't go into what that is. So the government has a choice as far as where to house them. They could build their own housing, which are projects. Or what they can do is they can contract with a nonprofit or a profit company and have them build these so-called projects, but there's a contract and those contracts run out. So what you have in Philadelphia is back in the 70s and 80s, you would have these developers come and they're building these projects. Basically, they're like privately owned projects. But now what's happening is those contracts are coming due, or those contracts are running out that they had with the city. Well, when they built these for-profit projects, is what I'm going to call them. When they built these for-profit projects, that area was probably blighted, or that area was probably the hood. But now it's not. Now it's gentrified. So when it's gentrified, now that property that has those for-profit projects on them is super valuable. So what's happening is that those for-profit companies are going to not re-up the contract. They're either going to sell the land or they're going to rent those for-profit projects out to regular people. I'm going to just say regular people like that, people who don't have vouchers. Because they're probably going to get more money. So that's what's happening in Philadelphia. Anyway, let me move on. So this reporter asked him, I'm talking about John Milligan, are there any risks that might offset this recovery? So they're asking him, okay, you're saying that the Philadelphia market has recovered, or the suburban Philadelphia market. So what risks might come in there? Okay, so what John says is that the risk of interest rates may have a short-term negative impact on property values, which I agree. However, we believe fundamentals will remain strong. Even as folks begin to move back to the urban core, the desire of millennials to start families and move to more suburban settings will more than offset the population looking to move back into the city. And this is right. This is one of the big reasons that there's not a lot of homes out there. It's not. Let me see if I can break this down. It's not that we don't have. It's low inventory, not because there's not enough homes out there. It's low inventory because of the number of people that we have out there buying. And one of those reasons is the millennials. The millennials, who are the biggest group, now they're coming into the ages of where they're looking to buy, where they're looking to settle down. So what happens here is that he's saying that people who have moved out to the suburbs, they ain't looking to come back. They're not looking to come back, especially in Philadelphia. They're not looking to come back. Why is that? Number one is that they're in their counties and they're looking at Philly, and the news on Philly is just like killing, murder, killing, murder, killing, murder, killing, murder, killing, murder. That's all you hear about on the news for the most part. So what they're in the county now. I live in Philadelphia. I live in Philadelphia. So I live in University City, and I know that's not the case. I know that's not the case. Why? Because I'm here. I'm here and I'm I'm walking the streets. So it's just not all killing. But I said this before. I'm not going to go into that what I said before. But what he's saying here is that a lot of those millennials are not going to be looking to move back to the city. And I believe him. They're comfortable out there. So some people are going to move back, and you do have a lot of high net worth individuals that are moving to the city. Those people who are coming here for the life sciences, also those people who are coming here for to go to a university or also to work in these hospitals. It depends on them. It depends on whether they want to live close to their work or if they want to be in the suburbs and drive in. People have their own reasons. People have their own reasons. Okay, so this going back to the article, what the article says is they're asking again, John Mullen, which submarkets or neighborhoods are you most interested in? So, John, what are y'all looking at? That's what this reporter is asking him. Hey, John, what are y'all looking at? So John says, we look for neighborhoods with good school systems, proximity to highways, and a good employment base, along with easy access to retail and various local amenities. We are currently building in Newtown Square, which is in Delaware County, Conshohocken, which is in Montgomery County, and have a development pipeline in Bucks County. These locations have strong fundamentals and we believe will continue to perform well. Okay, Newtown Square. Newtown Square is probably the closest place to Philadelphia that on a whole you'll find new construction. And Newtown Square is in Delaware County, but it's right next to Upper Darby. So you'll see a lot of $1 million houses out there, but you'll also see a lot of new construction. So there's definitely a strong appetite for that area. You have Conshohocken. Conshohocken, all right, what's your advice for someone looking to get into real estate? If somebody's looking to get into real estate, my advice is to go to my YouTube page. I have a YouTube page that talks about getting into real estate. Okay. But also, what you can do is just DM me. Okay. Go into my bio and just shoot me an email, and then we can talk further as far as how to get into real estate. All right. So he says Conshohocken. Conshohocken has been hot for years now, for decades now. And why is that? Because you're far enough as far as Conshohocken to feel like you're nowhere close to Philadelphia. But SEPTA, which is the transportation system in Philadelphia, it allows you. There's a train that goes out there. I think there's a regional rail line that goes out to Conshohocken. So you can jump on a train and come into Philadelphia every day and then go out. And that's what a lot of people do. They jump on a train or a bus to come into Philadelphia, work, then they go back out to the suburbs, okay? All right, so he's saying also a strong pipeline in Bucks County. Bucks County, there's still plenty of land out there in Bucks County. Housing in Bucks County is tight. As soon as something goes on the market, you got about 25 different offers. So it's still rocking and rolling in Bucks County. All of these, and as he said, I would definitely second what this guy's saying as far as Newtown Square, Conshohocken, and Bucks County. They all have super duper strong fundamentals, and they'll probably perform well going out. All right. Now, this reporter also asks him, investment activity picked up last year to almost reached the pre-pandemic levels. How do you see investment activity unfold in the upcoming quarter? Philadelphia is I'm going to answer first. Okay. I'm going to answer first. Philadelphia has definitely picked up. No, let me not say that. As far as investing, Philadelphia has been hot for a decade or so now, and it continues to be hot. Why? Because there's so many blighted properties here. There's so many blighted properties, and you can fix these homes up, and they're not huge. Because that's the one thing about doing rehabs is if you have a huge home, then what happens is your material costs are huge in respect to the home. So in Philadelphia, these homes are small. You have a bunch of row homes. These row homes might be 900 square feet, 1,000 square feet, 1,200 square feet. It would be large at 1,500 square feet. So a lot of people a lot of investors come into Philadelphia because of that, but they also come into Philadelphia because of the low taxes. So you also have low property taxes. So it's just cheap to come in here and build up homes and then rent them out. It's super cheap compared to other cities on the coast, compared to a New York, of course, compared to a DC, compared to California on the other coast. So that's why Philadelphia is prime. It's been a hot market and will probably continue to be a hot market moving forward. Actually, in the newspaper, I think last year, Philadelphia was number 3 as far as the profits that you would make. As far as they rank the cities in reference to the profits that flippers made, and Philadelphia was number 3. Philadelphia was number 3. All right. So again, let's see what John Mullins said when he was asked investment activity. Does he see investment activity? What's going to happen in the next couple of quarters? What John said was with the historically large amount of capital available for deployment within the multifamily sector, along with the strong operating fundamentals over the prior 12-month period, we believe the investment sales activity will remain strong over the coming quarters. I agree. There's a lot of money out there. There is a lot of money. Money is super cheap right now. People are almost they're almost giving it away. They're almost giving it away. So there's money out there. All right. What he continues to say is that we are consistently in the market, both as buyers and sellers, and have been continually amazed at the velocity of investment activity. Each asset appears to be achieving record pricing upon sale, in addition to sellers having their pick among countless well-qualified buyers. All right. So what John is saying here is that his company is buying homes and selling homes, and are just amazed at the number of investors out there and people who are buying investment properties. All right. He's saying that each asset is achieving. There's just a lot of what he's saying here. There's just a lot of activity in the real estate market now. A lot of activity. Why do I think there's a lot of activity? Number one is that money is super cheap. What do I mean when I say money is super cheap? Is that your access to money, if you have a good credit score, if you have a good credit score or an okay credit score, you can get money. Even if you don't have a good credit score, you can get money. Now, yeah, you can't go to the bank and they're just handing out money like this. No, I'm not talking about that. But there's different ways and there's different plays for you to get money. And the way this system is set up, I almost feel like it wasn't set up for, let me say it like this, those without access to information. But because of the internet, that's kind of changed the game. The internet has really leveled the field as much as it's been leveled for a long time. So a lot of us are learning what to do. A lot of us are learning, okay, how do I access capital? So I think people's fundamental knowledge on how to gain capital is one of the reasons why there's so much money out there. Also, you have a lot of people learning about real estate. You got a lot of people learning about real estate and trying to get into real estate. So again, that knowledge, as far as real estate goes, people are waking up. So that's why you're seeing all of this activity in the market. All right, so now they asked John, what types of multifamily assets are the most significant after? Oh, I'm sorry, I read that wrong. Retarded. It says, what types of multifamily assets are the most sought after by multifamily investors? 1 second, my nose. This always happens when I'm on live. I promise you. Alhamdulillah. This always happens when I'm on lives. When I'm not on lives, it doesn't happen. I'll go all day without sneezing. But when I get on lives, I start sneezing. All right. So they're asking John, what type of multifamily assets are sought after by multifamily investors? So what John says is that we are developing new assets, but also analyzing existing properties. And sometimes those worlds blend for us, either as we buy an older property and look to upgrade it physically, or as we look at newer assets and look to increase value through improved operations. So they're asking John, what type of assets are you looking at? Like, are you looking at new construction, or are you looking at to take an old property and redevelop it? Okay, and what he's saying is that we're kind of doing a blend of both. What Josh says is both asset types seem to be incredibly sought after, especially in strong suburban locations. While we believe the urban recovery is already in full swing, there is always going to be a large subset of renters who will prefer suburban living. Therefore, we believe demand on the rental side for our target locations and assets will be tremendous for the foreseeable future. So what he's saying is that we're in the suburbs, and the demand for rentals in the suburbs is going to stay high. And I definitely agree with him. It's going to stay high. Why? And he's going to go into this. But one of the reasons is because of the school districts. Because you have to live in a certain place to go to certain schools, certain public schools, then a lot of times in Philadelphia, I'm just talking about Philadelphia. In Philadelphia, the public school system sucks. So if you're not in a charter school, or you're not paying for a private school, then you're probably going to want to go to a place where the schools are better. So if you rent in the suburbs, then that's going to allow your kids to go to a better school, right? Makes sense or makes sense? All right. So now what they ask in John is, they say Philadelphia is rapidly expanding into the major life science cluster. How do you expect this growth to impact multifamily development in the future? So what I expect more people to be coming to Philadelphia. When more people come to Philadelphia, you're going to need more housing for them. And there are going to be certain places that a lot of people don't want to live in. So that's going to shrink the pool that they can live in, which means what? It's going to drive up the prices in that area. So what John says is, generally speaking, a growing employment base bodes well for multifamily demand. Why? Because if the employment is growing, you're going to need more rental units. He continues to say, we are excited to see the continual growth within this sector, as it will bring well-qualified renters to the population. Yes, because in order to be in life sciences, you have to be well-educated. What comes with being well-educated? More money. So because these people have more money, they'll be, most of the time, they're good renters. It says, we continually target locations where healthcare is a driver of the local economy due to the relative stickiness and endurance of those jobs through downturns. So with these jobs that they're looking at through the healthcare, okay, and through what did they ask about? The life science, okay, life science. So those jobs in the life science area, once a person gets those jobs, they usually don't move around. All right, they don't usually go anywhere. So with those jobs, he's targeting those areas that have those jobs. This is what he's saying here. All right. So then they ask him, as most companies have embraced the remote or hybrid work culture, the work from home model seems to be here to stay. Have you adopted your communities to enhance the work from home experience? So I'm not going to read all of this, but what John says is that yes, the communities that they're building, they're basically building out their business centers. So if you ever been to a hotel and you'll see that they have business centers. Well, these apartment complexes that he has, when they're building them with extended clubhouses. So now the clubhouses are huge. So in here, he's saying that the clubhouses will have ample space for the remote working residents. Expanded business centers will have conference rooms, workstations, private workstations, and private offices, all with computer monitors to plug laptops in. And I think that's what you're going to see overall. With more people staying home, what you're going to see is more complexes, apartment complexes that they build. They're going to have a vast clubhouse for people to go in and do their business in these expanded business centers. All right. So last but not least, what they asked this guy, John Mullen, is they ask him, what are your expectations for the housing market this year? So what he says is that the housing market will continue to perform well in 2022. The growth rate experienced in 2021 to an all-time high. Levels of pricing for multifamily rentals may slow slightly in 2022, but overall, we believe they will remain strong relative to historical levels. And I agree. I agree 102%. What's going to happen? I got a comment here. What did somebody say about the comment? 1 second. See if I can see this comment. No, I can't see that comment. So he's saying he expect growth rates to still go in a positive direction. And I would say the same thing. What do I see is going to happen in 2022? People are still out there buying like crazy. Okay. They are buying like crazy with more people with the millennials, like I spoke about earlier, with the millennials growing. Okay. And with the or getting older and them getting into the okay, now it's time to settle down. The housing market is just going to be pushed up. And with them getting out of their mom's house, their mom and dad's house, and going into the apartments, the multifamily market is going to grow also. So we can't build in Philadelphia, we can't build homes fast enough. We can't rehab homes fast enough. But there is one thing, and we're done with the article. But there is one thing that the government can do is the government can stop sitting on so many foreclosed homes. They can make it more streamlined to get these foreclosed homes to the market. If they were to do that, then that would meet the demand a little bit. Excuse me. I think the government is sitting on, forgot what the last number that I seen, but they're sitting on a lot of empty houses, a lot of foreclosed houses. And some of these cities have land banks that they make the process very convoluted, meaning what? They make it hard for investors to get their hands on that property. So that is something that the government could do if they wanted to, versus making all of these policies and doing things to where you're taking your right hand and scratching your left ear. No, why don't you take your left hand and scratch your left ear? Meaning what? Why don't you make it easier for these auctions? Why don't you make it easier for investors to get at these foreclosures? If they do that, then that would help the economy out overall, I think. All right, this is just my opinion. All right. All right, y'all. Again, this is Colin Nathan Aleem, the real estate boy. Let me see if I have any questions. All right. We'll spend maybe like 5 or 10 minutes. If anybody has any questions, let me know. I'm going to go through these lives here and see if anybody has any questions. Are you giving any opportunity for mentorship in real estate? I am. Um, I do have an opportunity for mentorship, meaning for a person to become an agent, for a person to become a real estate agent, not for an investor. I can turn you on to a mentorship for investor, but I do have a mentorship for real estate agents. All right. What else is here? Philly is just too much. It's not what it used to be, and done and raised, and I don't miss it. Philadelphia school different. That's another story. No way my child is going to school here. All right. So I'm going to address her first question. She said, Philly is too much. I'm going to say this, and I said this a couple times, because the last Friday, I went over an article that was saying that high income homeowners are growing in Philadelphia, and low income homeowners are leaving Philadelphia. So this, in the last decade, from 2020 to 2021, Philadelphia lost a quarter of its low income homeowners. A quarter. Okay, 25% of them left. So what does that mean? These high income homeowners, they're almost a third of the homeowners in Philadelphia right now. And they're increasing, which means what? I'm not saying Philadelphia is going to look like New York, because I went to New York yesterday. No, 2 days ago. Wednesday. This day's Friday, Wednesday. And man, I mean, just the amount of people there. It's just, if you've never been to New York, which I'm sure most of y'all probably have, I mean, wow. The amount of people and the infrastructure. The infrastructure, and I'm not even talking about like in Manhattan. I was in Harlem, and you just have these big, gigantic homes. You got these big, gigantic projects. You got these big, gigantic apartments. And it's just so, I don't think Philly's going to get to that no time soon. But Philadelphia is going to be a lot more expensive. Philadelphia is being gentrified for the most part. And the thing about us is that we try to come back when the prices are up. When the prices are up and stuck, then we want to live there. I'm going to give you all to play what happens. So what happens is, I'm not going to say that they let the area get run down, but somebody lets the area get run down. So means what? The prices go down. Then they buy it and they put you in there. They buy it and then they put you in there. And then they wait for the prices to rise. And then when the prices rise, now you can't afford the rent, they kick you out. The area is gentrified. So either they move in, or they sell it, or they kick you out and then charge more for it. What's the point of this? The point is that we need to be owners. We need to be owning some stuff. We need to be buying, as they say, buying the hood up. And if you don't want to live there, okay, rent it out. You don't have to live there. But Philadelphia, last year, the equity in properties grew like 19%, 20%. If you're renting, then you can't take part in that. You cannot take part in that. So anyway, I'm about to jump off this live, but I just want people to know that you want to be buying some stuff. And don't think that you can't buy a house. Talk to somebody. Talk to a professional. If you're in Philadelphia, If you're in Pennsylvania, New Jersey, or Delaware, I got you. All right. Call me at 267-930-1249. Again, that's 267-930-1249. Don't tell yourself that you can't buy a home. There's a lot of programs out there. There's a lot of programs out there. But what you got to do first is you got to make up in your mind that you want to buy a home. This is the first thing. Then you need to find out, okay, how do I buy a home? Meaning what? What do I need to be prepared to buy a home? The first thing you're going to need is a good credit score. This is the first thing. So what do you got to do? You have to check your credit. See what your credit is. If you go to my link, which is www.khalednathanaleem.com, you can go in there and get your credit for $1. For $1. So go in there and get your credit. That's the first step. Then also at the same time, you got to be saving up some money. I know some of y'all taxes hit. Y'all got to be saving money. You got to be saving money for your down payment, because they're not just going to let you get a home with no down payment. There's going to be some costs. So be stacking as much as you can. And then after that, then you're going to go to the bank or the mortgage company. Then you're going to go to them. And then, okay, this is what, because you want to have your finances in place first. Once you have your finances in place, then you can rock and roll. So anyway, I'm going to jump off this. But again, if you need me, if you're looking to buy a home, sell a home, or invest in real estate, I got you. Again, that phone number is 267-930-1249. All right, y'all, I'm out.